Uncertainty has weighed on the UK since the EU referendum, and compounded by the COVID-19 pandemic in 2020, the UK GDP contracted by 9.9%, the deepest slump since 1709. The pandemic gave protection to occupiers from rental payments, created restrictions on buying or selling assets, and saw debt providers pause from enforcing sales on defaulting loans and making new loans. With the UK largely having been off the map of global investors for the last few years, real estate values have lagged in many other parts of the world. And today the yields on core real estate assets in the UK are much higher than in other major European cities. Notwithstanding these challenges, the pandemic and departure from the EU hasn't changed the trends in real estate, it has just accelerated them. The growth of e-commerce and falling interest rates have been longer-term trends, but COVID-19 has sped them up. It has not changed the growth trajectory for the UK population though. The UK is not only growing fast, but is one of the most densely populated countries in Europe. Given this, it's no surprise we are seeing broad investor consensus towards the attraction of residential and logistics. As the government pursues its strategy of building back better, its focus will be on the delivery of 300,000 new homes annually to meet a housing shortage. Multifamily and suburban single-family rental accommodation are a small part of the UK market, although Fiera Real Estate believe this area has great potential with increased private sector support. Build-to-rent is likely to be the best way to bridge an affordability chasm that has grown in recent years, with more investors accepting a lower return from predictable, inflation-linked rental income streams in a £7 trillion UK residential market. The private sector will also drive demand for logistics space to meet e-commerce growth and newly created post-Brexit supply chains. Higher UK property yields will continue to look attractive, with a 500 basis point spread between the all-property yield and 10-year UK gilts. Owners or creators of commercial real estate or high-quality residential real estate will continue to find high demand for assets from yield-starved investors. Despite all this opportunity, focus will increasingly grow into how we prepare and mitigate the effects of climate change. The UK should be relatively well placed in terms of its economy, infrastructure and geography. However, many commercial assets will become obsolete due to the cost of improving a poor building performance or its location. Whilst delivering sufficient affordable shelter is possible, delivering a more environmentally responsible and resilient Britain will be much harder. With £1 trillion commercial property, the potential for value destruction is huge as we prepare for a net zero carbon future. The slower property owners are to adapt via improved development standards or upgrading the assets they own, the sharper and more painful value destruction could be. We need to build back, but better.